Hello and welcome to Economy and Markets TV, the show that takes you around the world of economic and financial news. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent Research. As you can see, joining me today is Harry Dent. Harry, welcome.
Nice to be here, Dave.
Yeah, great to have you. Harry, a couple days ago, we got some news that the S&P hit all-time highs. Of course, the Dow wasn't quite there yet, but even bigger news is that as of yesterday, going past yesterday, earlier this week, we are now the longest bull market in history, which surpassed the run from October 1990 to March of 2000. Of course, we know what happened after that. So, Harry, what do you make? We're in history now. So, what are your thoughts on this?
Yeah, that was 3,453 days to be exact. We did that on Tuesday, and that says we're now in uncharted territory. Now, that definition of a bull market is a bull market without a 20% or more correction.
Right.
Our work in demographic and technology cycles, we look at longer-term bull markets around these cycles, and that's a 50% plus correction before I say we've seen a long-term bull market peak. The longest in history was 1942 to 1968 with the Bob Hope generation and the auto technologies and electricity, and that was 26 and a half years. Well, this bull market started at the end of 1974, and now we're 44 years way past that. So talk about uncharted territory. And another thing we do in 0 Hour and in the Sale of a Lifetime book, we look at bubbles in depth, especially stock bubbles, but all bubbles. How do you measure? When do they start? The typical stock bubble, out of 7 we measured throughout history, 5 years. Some a little short of the longest one was the tech bubble, which really the bubble phase was late 94 into early 2000.
Right.
This one, if you measure it from the March bottom in massive quantitative easing, 9.5 years and going, and if you measure it most conservatively after the correction around the Euro crisis in late 2011, still 7 years. So this is, as we've been saying, the greatest bubble in modern history. It has been extended beyond anything due to massive quantitative easing, now tax cuts. What it says to you as an investor, when this thing blows, it is going to be massive, more like 29 to 32. Our statistics also show through all 7 bubbles, 42% is the first correction in the first 2 to 3 months, so people get crucified right off the bat.